Hi, you are welcome once again to this YouTube channel. If you are new here, we talk about finance here. We talk about how to structure our finance and make more money. So you are in the right place, okay? So today, I'll be talking about the difference between ETF and mutual funds. A lot of people don't actually know the difference between all these things. They just know about shares, they know about stocks, they know about investment. So for you is to make it very simple in such a way that you will understand, all right? So ETF, the difference between ETF and mutual funds. So now let's talk about ETF first. All right, what does ETF mean? ETF actually means exchange traded funds. In a very simple term, all right. So, for example, now you decided to you want a bite of banana, you want a bite of apple, you want a bite of mango, you want a bite of pineapple, and all kind of fruit. All right. Instead of you buying them one by one, you decided to buy a basket of it. All right. So that's what I've done here. You see the basket of my fruit, right? So this one, let's just say this is orange, okay? This is mango, this is pineapple, this is apple. So instead of me buying them one by one, all right, instead of me buy all this fruit one by one, I decided to buy a basket of it so that I can have a full taste of it. It is called, in the financial market, it is called ETF, exchange traded funds. You understand? So there are a lot of ETFs, all right, in Nigeria stock market, in US, all right. We have S&P 500. What S&P 500 does is to track the best 5 companies in the world. Okay, so imagine you decided to buy S&P 500. So let's assume you want to buy S&P 500 with $20. All right, so let's assume you want to buy this one with $20. When you buy ETF S&P 500, all right, the $20, they will spread it across all the 500 best companies like Tesla, like Apple, like Amazon, like Nvidia, and all kind of companies. So there's no way you can lose money. And Warren Buffett even advised that people should invest more in ETF than individual stocks. Individual stock is very good. If you know how to do it, you're going to make a lot of money. All right, so let's go ahead. So let's talk about mutual funds. All right, have you heard, if you are from Yoruba, have you heard something like ajo? In Ebola, I think they call it esusu, right? So everybody comes with their money, okay? So I come with my 100,000, you come with your 50,000, another person come with 150,000, all right? So it is called mutual funds, all right? Mutual funds, all right? So now when we get this money, let's assume everything is now 10 million, all right? So we now give it to financial managers. They are called financial managers, all right? Financial managers, all right? So these people, they are the ones that now determine where to invest this money into, all right? So they can decide to invest this money, or they can decide to invest this money into they can decide to invest this money, so 10 million, right? That's all the money that was contributed. The financial manager can decide to invest the money into stocks, all right, gold, all right, euro bonds, all right, treasury bills. I will still make a video. If you want me to make a video about all these things, please just drop a comment. Tell me each of this one you want me to make a video on. All right. So the mutual fund now, they can now decide, how the financial manager will now invest all this money into this. So they have mastered the trade. They know what is going on in the financial market. They know the trade. They know where to put the money, right? So they now spread the money into this, all right? So at the end of it, they can now say that, okay, at the end of it, we're going to give you guys 10%. We're going to give you guys 15%, all right? So if you want to do like mutual funds of Nigeria right now, if you're in Nigeria, if you want to do Cowrywise has this investment, Cowrywise, all right? Cowrywise has it. Optimal by Afrivest also have it, all right? Afrivest, all right? So if you need more knowledge, do well to click on the number in the description, all right? I will guide you on how to go about it. So some of it are 21%, yeah. Some of them are 21%, and some of them are 18%, all right, annually. Which means that if you invest, for example, if you invest 100,000. So let's assume that you invest 100,000, all right, as your capital, right? So and the mutual fund, the least they do right now is 20%, all right? So 20% of 100,000 is 20,000 naira, right? So without you doing anything, right? Without you doing anything, you have 20,000 at the end of the tenure, right? And most time, this, for example, now if you can buy a mutual fund for 10 naira, all right? You can buy mutual fund for 10 naira, all right? So before the end of the tenure, it can turn to 21 naira or 25 naira. You understand? So you are making more money in your capital investment. You're also making money the return on investment, ROI. You understand? So I believe you will really understand more about ETF and mutual fund right now. Okay, if you have not subscribed, I'm waiting for you to subscribe. All right, thank you for doing that. Thank you for subscribing. Click the subscription button right now for more video. And if you want me to do any video, please let me know in the comment section.